Daily market commentary for Thursday, the 14th of November of 2019. I hope everyone is having a good week trading. As Thursday began, it struck me as being a rather strange week. Lots going on in the world, but FX seems to be taking the week off, so to speak. Trump impeachment hearings, wavering US-Chinese trade deals, continued protests in Hong Kong, and US equities making all-time highs. Throw in an imminent election in the UK with a healthy dose of unresolved Brexit, plus, of course, the beginnings of the US electoral process for 2020, and you would think there was enough in the world going on for FX to react, or at least for traders to speculate on. But thus far, the highlight, at least in terms of volatility, was a spike higher in Kiwi as the RBNZ left rates unchanged, rather unexpectedly. I confess, probably not my original pick for the highlight of the trading week, but thus far, it's wearing the gold medal. So, would Thursday provide more clarity, or at least some volatility for us to fret over? In short, not really. A worse than expected Australian employment number saw Aussie US head lower from 68.40 to 67.70. Not a move to be sniffed at, but the first half of that move, much like the Kiwi move of the other day, happened in seconds. So if you blinked, you missed it. The only real recurring theme for the day was for yen crosses to slide lower, which did seem rather at odds to the US equity gains that we've seen during the week, taking us to pretty much record highs across the board. However, the lack of follow-through in global equities today was enough for some traders to sell yen crosses. The dollar, aside against the yen aside, started off brightly, but with a brick wall of support sitting between 109.90 and 110 figure in euro dollar, as my commentary earlier in the week, as well as a move lower in US bond yields, which saw the 10-year yield down to 1.81%. The dollar would do a U-turn during the US session. We saw euro rallying from a low of 109.90 to touch a high of 110.27, and we saw sterling jump from 128.30 up to a high of 128.88 at the European close. And we also saw dollar yen drop from 108.85 down to 108.27. The beneficiary of lower US rates on the day would really be gold, which rallied from 14.62 to a high briefly around 14.74. So for Thursday, FX really seemed motivated by the US bond market as much as anything else. And as for equities, the early day sell-off and all profit taking didn't really last, and all three major indices actually ended up closing near enough flat on the day. So for FX, I guess the real main talking point was probably the support level, sub 110 holding for euro, and the move lower in yen crosses. Whether we continue to see that on Friday remains to be seen, but definitely something to watch for. So just moving on to a technical piece to end the day, and as mentioned, my last technical piece focused on the support level in euro dollar between 109.90 and 110. I think today's price action more than justified that particular reference. So today I just wanted to turn to dollar yen. Just a very simple chart here. We broke the support here from the previous low, 108.65. As you can see, after some sort of fairly unconvincing price action around that level, which you can see we sort of oscillated either side of it. Wasn't exactly the cleanest of breaks I've ever seen, but it broke nonetheless. And then you can see once we got below 108.60, we had a fairly sharp drop down towards the lows of the day around 108.27, and then a little bit of a squeeze higher towards 108.40, 45, I guess, as equities made back some early small losses. But for now, might as well respect this level. 108.65 should act as some decent resistance initially, and to the downside, you see here we have some solid support coming in around 107.90. So I guess respect that range. Into the Friday US data before we end the week. And with that, wish you all a good morning, afternoon, evening, wherever you are, and speak to you soon. Cheers.